All right, ladies and gentlemen, welcome back to another YouTube video. It is K Dune Trades, and in today's video, I'm going to be going over the model that has made me thousands upon thousands of dollars in the year of 2025 and this month in January. And actually, a great intro to this video. You can see this model live. I'm in a trade currently, but let's get into it. So first, we're going to go over the model itself, and then we'll get into the discretion. So the model is fake sweep of a high or a low, a pullback using the fib to OTE or 618, and then you have your entry confirmation. Before we start, I'll show the fib settings right here. Go ahead, take a screenshot of that, and we will continue. So, fake sweep of a high or a low, pullback to OTE slash 618, and entry confirmation. So, what does this look like? So I drew up this little thing. Let's say we're accumulating right here. We're going to pop up. We take a sweep of this low right here and a sweep of a high. And this is the fake sweep leg. You would put your fib from the bottom of this wick to the top of the move. And you would wait for price to retrace back to your 618 fib. So what I mean by that is on the fib, there is, oh my goodness. Delete this here. So this would be a bullish fib. Typically, the fib works on bigger legs, but in this example, I'm using this. As you can see, it kind of looks like this. These are like weird looking lines. You kind of wondering what this is. Um, as you can see, whatever you draw your fib from, you have your optimal trade entry or OTE at 0.618. So this is considered the golden pocket. Zero point 0.5 would be kind of, you can also enter off of 0.5. Typically ranges get rebalanced off of 0.5. I also did want to say one thing: the two directions that the market moves or the market does is seeks liquidity. Now, with that being said, these are the two things that the market does, so keep that in the back of your mind. So that was a bullish fib. We now know what the entry levels are. You can also enter off of 0.786, which I rarely do. I really don't do that. Um, a bearish fib would look something like this. Let's say we're accumulating. We have a pump and a sweep of the low. So we have a break of this high and a sweep of this low. Now I would put my fib from this wick, depending on if it's pre-session or if it's mid-session. Pre-session, you would be looking at manipulation wicks. I'll get into that in a second. Instead of for the manipulation wick, it's just instead of the wick to the wick, it's body to the wick. So this is a bearish fib. So what we would do is we would take this fib from the top of the wick. Why am I doing that? You take the fib from the top of the wick, let's say it's right here, to wherever this leg ends. Let's say it ends right here. We would wait for our pullback up to 618 for us to continue lower. The market acts as a slingshot. For us to go lower, we have to gain more buyers. Therefore, we go up. And then when we are ready to sell off, we kind of continue lower. All right, now that we've gone over what the model is itself, we've went over a bullish fib and a bearish fib. I will show you guys examples of that in a second. But more importantly, I want to go over the discretion part of it. So the first thing I do when I am looking to enter a trade, I first have to know my bias. Now, the bias is super important. Are you bullish or are you bearish? This depends. This is dependent on what you are looking for. And if you are correct on your bias, your trade is typically correct. So, for example, let me show you some examples on bias. Let's start with this week. So, this week I had a bullish bias after we had a 200-point drop in this huge new week opening gap. As you can see, I have a bullish bias. So that means if I am bullish on the week, it would look something like this: Monday, Tuesday, Wednesday, Thursday, Friday. if I'm bullish on the week, typically we start out bearish. Wednesday, we kind of start to reverse and we kick it up a notch at the end of the week. Like I said before, the market acts as a slingshot, so it must continue lower, or it must pull back to continue higher. My apologies. But this works on higher time frames. This is why weekly bias is important as well, because the market acts the same on the 1 minute, the 15 minute, and the hourly. The market is fractal, so the market is the same on every time frame. So, with that being said, what I would be looking for is shorts. If I have a bullish bias, I'm waiting for a short setup. So, what does that mean? Okay, cool. So, I've got some decent confirmation that we're going to end up bullish on this week because we have a huge gap to fill. That means I'm just waiting for a sweep of a high and then a sweep of the low for us to create a fib. And boom, that's exactly what we got. Literally an hour into Sunday open. You could have taken this leg from the top of this wick. Let's delete it and do it again. So you could have taken, as you can see, technically we didn't really sweep this high, but you can still fib this because we had a good sweep of this low. You could have taken your fib from this wick. Oh, you could have taken that fib from the top of this leg to the bottom of this leg for an OTE entry, or the bottom of that wick for your entry. Could have taken that on 618, and that was your high of day. You could have taken that with a 10-point stop, targeted 100 points for a 10R. Could have held this through the entirety of the night. That was high of day on the 618 on the bearish fib. Only until Asia the next day did we end up. Nah, that was still high of day. That's crazy. Um, and so another thing I need to add about the fib is these extension levels. Now, these levels are important because if you have a correct fib, there should be reactions off of each and every single. I wouldn't say every single level, but if you have a really good fib, you're gonna see. Now the technical term for a Fibonacci retracement is it is a Fibonacci-based corrective ratio, and it's used to measure the depth of a pullback within a complete price leg, meaning one leg before we reverse. Now, these extension levels here are used, if used properly, to target continuation levels or reversal levels. So, as you can see, this fib had a reaction off of -1. You could have taken a trade off of this. Now, typically, you know your fib is correct if you've entered this and you've been in this for hours, you can pretty much tell that you're going to end up having some sort of reaction on your extension level. Now, you could have taken this for what my model calls for as 50 points off of -1 with a 12-point stop, and you could have taken that there for 50 points in and out. Could have taken that, waited for market to pull back and continue lower. And what do you know? We have another exact tick, or I'm sorry, an exact reaction off of this level. You could have taken this off of -2 with 0 points of drawdown. Could have taken this with a 5-point stop for 50 points. So I hope you're starting to see that these levels all have a meaning. Same thing with these 618, your entries versus your potential reversal spots, anything like that. Now you could wait for confirmation. If you draw a proper fib and you catch your entry and you know this is still a proper fib and you're waiting for price to kind of play out, watch how it reacts in the future off of those levels and see what it does. And you can start to pick up when to enter off of these. So -1, you could have caught your -2 You could have caught the exact -2 with 0 points of drawdown. -2.25. You could have taken this. This is the bottom of New York AM. So you get the point. So that is a couple of examples using the mechanical model itself mixed with my bias. Now we're going to get into what the exact risk to reward ratio is and kind of some psychology behind it. Now, it's super simple. I keep it extremely simple. Now, I always have a 12-point stop loss at all times. And I'm typically targeting either a 1 to 4, which is equal to, oh my God, 50 points, or a session high or low, depending on what your current session profile is. Um, Now, you can't just use bias in the model itself. You have to understand what session profile we are in and kind of have a daily bias as well because you can't just depend on a weekly bias. You need to understand whether we are in a continuation leg or a reaching a potential reversal spot, and we'll go over all of those right now. So, now we're going to come and get into session profiles. So, it's not on the screen right now. I'll pop it up right here. So we have four different types of market conditions here. We have New York continuation, New York consolidation, New York reversal, and search and destroy. Now, you can see this with a indicator called the ICT kill zones and pivots by TFO or something. Um, that'll give you a good look at what at the session highs and lows. Um, just look for those patterns and understand. You'll start to understand what type of condition we are in or profile, whatever you'd like to call it. Um, but this is important for your entries as well. Now, as you can see here, now that I have my bias down and the mechanical model itself down, as you can see, I'm still bullish on this week. So if we're on a Monday and we're bullish, I'm assuming we're going to be bearish for the first couple of days. And what do you know? We have a New York reversal profile. As you can see, we swept out London high and New York lunch high and paired your pair your bias with your session profile, and you'll understand what direction the market is going. So now that we went over Monday's trades, let's get into Tuesday. So now knowing that I still have a bearish bias and knowing that most of my trades that I take are pre-market AM session and Asia, I'm going to watch most of the day play out. I might take a trade during late AM if I see some good structure build, but typically the main two times I trade are during Asia and pre-market, and I'll show you why right now. So let's get into Tuesday. We've went over Monday's trades. Let's take a look at Tuesdays. Now, we're up at pre-market, 6 a.m. I decided to anchor my fib on pre-market to this leg right here. Why? Because this is the leg that swept a low. I decided to anchor my fib right here, and that's because we swept this low and this high. So I took my fib from the top of this wick to the bottom of that wick, as we can see, for a bearish wick. And as you can see, -4 is typically our reversal spot per se, and I ended up taking pre-market longs, and I could have held that, but as you can see, this is how I used my fib. I could have gotten my entry off of 618. I could have taken shorts. That would have worked too if I wanted to jump in those. or I waited because I didn't catch shorts. I waited, I anchored this fib, I watched price play out and come down and watched how it reacted off of -4, and then there was my entry. Took that for 50 points, and that's a banger trade. So after I take a trade, I kind of more of the psychology part about it. After I take a trade, I'm kind of just watching how the market moves and if it's playing out according to my plan. So if I still have a bearish bias going into Tuesday and Tuesday's going to be bearish, I'm going to wait and I'm going to look for, okay, on the in the bigger picture, you could look on the higher time frame, but in the bigger picture, we come down, we pull up, we we come back up, as you can see. Like I said previously, the market acts as a slingshot and it has to come back up to go lower. And the market is fractal, so this works on all time frames. As you can see, we came back up to continue lower. And then we come back up to continue lower again. So typically, anytime there's a larger leg, it has to be rebalanced. So I drew my fib on Tuesday, New York PM. I ended up drawing my fib here from this bigger leg because every leg must be rebalanced because there is a zone right here that the market is imbalanced. So the market needs to rebalance to continue where it needs to go. So we actually did not get a reaction off of that until AM session. So this leg did not end up getting rebalanced. This imbalance did not get filled until the next day. So sometimes it does take some time, but you actually could have taken that trade. This is Wednesday's AM. We'll get into that in a second. You could have taken that trade for 50 points off of the point 0.5 because that leg got rebalanced. You could have taken that trade for 125 points. You could have taken a 15R right there. Um, so now that a leg gets rebalanced, I look for a new leg to form so that So after, let's say this leg gets rebalanced. Okay, what now? So I'm going to wait for a new leg to be formed, more structure. So we could see that this leg was created right here, this very bullish leg. So of course it has to be rebalanced before we continue. And now Wednesday, remember what I said about bias? Wednesday is typically a reversal day. So as you can see, I was bullish on Wednesday. You could have taken shorts, but I was bullish. I ended up catching longs and I caught the shorts. The reason why I caught the longs and the shorts is because I understood that the market must pull back to continue higher. It's like a slingshot. So, as you can see, this leg got rebalanced. This imbalance was filled in the market at the equilibrium, whatever you could get very technical with it, but I'm trying to keep it as simple as possible. Um, and Yeah, so technically this leg still has not been so now we are on current day Thursday today. So technically this leg of PM still has not been rebalanced. So now I'm going to be looking for shorts to come down and rebalance this leg. And my draw on liquidity is going to be PM low because we took out AM highs, we took out London highs, we left so many lows. We left AM low, lunch low, PM low. We left all of these liquidity lows and only a PM high. So I believe that for London, we're going to be bearish. We're going to be bearish and bullish for the rest of this week. Now, I hope that gives you kind of a live sense of my brain on the market. Um, we went over the mechanical model itself. We went over the extension levels on it. We went over bias. We went over the session profiles. We went over continuations and reversals. We went over what the market does itself, and we went over the exact entry every time. So your target and your so you should never be confused on a target. If you're not holding for a session high or low, just go for 50 points or a 1 to 4 R. Always, always, always keep a 12-point stop loss. So you should never be confused on about where should I put my take profit, where should I put my stop loss. Always stick to this. It'll be so simple. It'll save you so much headache and time. We went over a lot of things in this video, so I hope this makes sense to you guys. That was this trading week for me. We're gonna be making some more educational videos soon, so stay tuned for those, and I'll catch you guys in the next video.